Hey, everybody. Welcome back to Unlimited Capital. I'm your host, Richard McGurr. I had a really great conversation with Craig Eppler. So, we started talking about the value of storytelling in sales and marketing and capital raising. And really, storytelling is the most important part of how you need to be communicating with your investors, doing your presentations. I mean, really everything. I mean, any point you're trying to make, you need to figure out a way to tell a story to make that point instead of just like fact dumping people. Um, I mean, the main reason is imagine the last time someone just started telling you like a bunch of random information versus like you can't even remember that versus the last time somebody told you a really great story. You can probably imagine that vividly. And then the conversation turned into just like a bunch of really tactical swapping stories, talking about, you know, how we could be improving his capital raising business. So like this turned into a bit of a coaching call, which I think is really useful because I would say like, I mean, a lot of the issues he's dealing with around like speed to lead and tightening up and getting more out of the leads that he's already getting is probably where he needed to be spending his time, and gave him a lot of tactical ideas on that I have a feeling that the vast majority of people listening to this call will be able to apply. I actually want to start doing a lot more of these coaching call type episodes. So reach out to me on LinkedIn or Twitter if you'd like me to do a deep dive on your capital raising in your business and like do it live on the show. I think that a lot of people would get value out of those, and I think it's really good content. So without further ado, let's get started. Hey, Craig, welcome to the show.
Hey, Richard, how are you doing?
Doing
Nice to
really
be here.
good,
Thanks
man.
for having me.
Yeah. So tell me the story of how you learned that storytelling was a good way to, raise capital.
Yeah. So for me, storytelling, my background was more traditional financial advisory space. I was more on the portfolio team, but as I sat in on meetings, when I would kind of go into the nitty gritty of investments, I saw people's eyes kind of start to glaze over a little bit. You know what I mean? And I think we're all like that to an extent of stuff that we're not interested in or not really familiar with. So when I started the firm that I have right now, I thought, oh, people are going to resonate with the investment side. Like it's all about what the return is, all the figures, all the stats, everything like that. And as I talked to more and more people, when I would tell stories about the deals and the investments that we were making, it seemed to resonate much, much more with our clientele. So I'll stop there. I know that was a very high level and we can go way deeper than that, but
Yeah.
that's kind of how it all came about.
Yeah. I mean, first of all, I would just say that I completely agree. And shifting to, story-based selling and even just inserting stories into any customer conversation you're having to prove a point,
Right.
is just incredibly important. And I think that one of the main reasons is that people pay attention to stories. That's just how the human being works. I mean, like how the human brain works.
Without a doubt. I think people like look for things that they can resonate with, right? And if you say something of either where the deal is located, maybe they have a family member in that area, or if there's a sports team that's in that area that they're like, oh, that's I've been to that area, that sounds interesting, or if there's a person that that's part of that deal, or how you met that person that gave you that deal offering. I think there's a bunch of different ways you can kind of tie in someone's life into that deal, besides just saying this deal gets you a 15% IRR. Most people that I talk to don't even know what IRR means. So
yeah, pet peeve of mine when people are like, okay, we could go on and on about what people think IRR is versus what it actually is, but we will move on. I think another thing that you just hit on is I always say that you have to increase the surface area of the personality of your own personality that you present to people, because like everyone is going to relate to you in some very unexpected way, because like you don't know the story of their life, and that the more stories you tell, well, that's why people often talk about having kids. This is like one of the one of the easiest ones. Like, oh, do you have kids? But can you give me a good example of how, like, take a given deal, let's call it like a value add deal or something like that, and like, how do you assemble a compelling story, and what are the elements of that story?
So I'll give you something a little bit different than a real estate deal. I know this is a real estate podcast.
No, that's fine. Fine by me.
My fund offers more of a kind of fixed return, and we have hard assets backing it. Anyway, I like to, people always ask like, what are the deals in there? If it's not real estate, what's in there and what's backing this? one of the investments that we've made recently, and I think this is a good kind of way that people can feel that they're in the deal a little bit more. We invested in a group that does dog waste pickup, which
Okay.
sounds off kilter, but a lot of people have a dog. I don't have a dog, but a lot of people have a dog, and people love their dogs, right?
Hmm.
Um, so people are like, that's really interesting. Tell me more about that. So I go into the deal of like, hey, we met these people through a friend of mine who I've known for the last 10 years. He comes across different deals like this, and then they always ask like, well, okay, well, it's a dog waste business. Like, what's the asset backing? And then I go into that, right? But it always comes back. They're interested in the dog waste, and then they're like, well, that's interesting. Like, can I get that for my own area, or can I franchise that, or like it always leads to something more. And is it like, well, it's like, oh, well, I have a friend who has this dog that's bigger, right? Should they get charged more because they like that dog has more, like an extra,
Yeah.
right? So I know that's a weird example, but something like that is something that I found that people resonate with, and I have a few stories that are within my fund that I found that really resonate with people. But the more deals that come in, obviously, the more different stories we have, and I always try to tie it back to something that most people at least have a tie to. Most people have an aunt or uncle, grandparent, whatever, who has a
Yeah.
dog, right? I'm not sure if that made sense or not. That was
No,
kind
it
of
did. It did. So, do you have a specific framework that you use for like creating a good story, or like trying to, or like do you have an intention when you create a story, or like one of several intentions?
Yeah. So usually before I talk with someone, the intention is I do a little bit of homework on them to see, what their background is. I do some kind of, what's the term that we used to use? The like social media stalking a little bit to see kind of,
Hmm. We call
um,
it prospect research.
of
That's
course,
the
prospect
clean way
research.
to say it.
That's great. I should start using that. That's great. So do some prospect research, find out, areas they're from, sports they play, things like that. I kind of draw on a few different things. This is the same thing I did when I was interviewing for jobs.
Yeah.
I try to find what the interview is doing, but it's just on the other side of the table. So I do some prospect research, and the intention is to bring up 2 to 3 stories that I think would resonate, just kind of based on where they're from,
Hmm.
where they grew up, family members, things like that. Or if they have a dog in the picture, right? That's always a good one.
Hmm. And it'll probably be on their Instagram, almost certainly.
Yeah, 1,000%.
Yeah.
So to me, that's the easiest way. And a lot of people don't do the simple thing of just looking up who they're talking to. And it takes 5 minutes right before the call to figure out who you're talking to right before. So not come up with a story, but I have a
So you
list of,
organize the stories in your library and
correct.
say,
I
I'm
have
going to
my
pull this
8
one
to
out.
10 stories and pick 2 to 3 that would fit kind of the
Yeah.
profile of the person that I'm talking to. That's at least how I do it.
Yeah. I mean, and something that we kind of got into there is that you should absolutely have a story library
Yeah.
that you've put together. Like very intentionally, you need to be putting these together because I just can't emphasize enough how storytelling is like the main mode of human communication.
For sure. I mean, think about when you're at a like a function, the people that are most liked are the people that tell the best stories, right?
Yeah.
And don't go too long, right? You always have the one friend that has the one detail they're stuck on that doesn't matter at all for the story. You got to
Yeah.
make sure it's crisp, clear, and you get to the point.
Yeah. I found that like one of the most important, I'm going to get like really tactical into what stories you should have.
I love it.
I think one of the most important ones, and this comes from Russell Brunson, is all about how you learned and earned something.
Okay.
Like because you have to explain how whatever nugget of piece knowledge that you learned and you're trying to communicate, if you just like give it out there, nobody's paying attention. Like you have to build it up and say, I spent 4 years of my career. I was almost broke. I met a mentor, like this person taught me this one thing and that I've spent years prospecting it and here it is.
Yeah.
Okay, I'm being like over the top, but like
No, I
a story,
understand. It's
like
wonderful.
a story I use all the time is that I share my company marketing SOPs as like a main piece of my collateral because
Okay.
it's document, don't create. Like these are really valuable. People really want them. And the thing is that like where these came from was like when we launched our business, we dramatically underperformed. I'll put it that way in terms of what we thought. I mean, very common for a startup, right? You
Of
think
course.
everything's going to go here. It did not go there. And we were like,
Okay.
we had some team members quit, because they're like, this isn't going anywhere. And all of the me and my two partners, we had like a heart to heart of like, do we want to do this? Like, I mean, were we cut out for this? Was this all a mistake? And
Yeah.
then a board member of ours introduced us to, actually, I just interviewed her, Lauren Brichelle, and
Okay.
she was like, came as a head of marketing at a very successful firm and came in, and I just paid her to write me a ton of SOPs. And that like from then on, like quarter after quarter, we've set records. And so I use that to build up, and here are my SOPs. And it makes it so that people are just like, like they really want to see like, what are these things?
Right. Yeah. I mean, I want to see them now.
I'll send them to you after the show.
Yeah.
Like I send them to everybody. Like it's not, yeah.
That's great. I really like that. That's a good story. I'll give you
That's
one.
one of my main. That's like a go-to.
Yeah, no. And I'll tell you one that like I use because people ask me like how I got started in like in real estate, even though the fund I have now isn't real estate focused. It starts with the real estate kind of journey, right? So I always say I was working my corporate gig, right? I was living in the center city, like in Philadelphia. I was commuting out. There's an hour-long commute. I was stuck in the car, and I would listen to podcasts, So I'd listen. I actually, back in the day, I listened to this one. I listened to Bigger Pockets, like the classic real estate podcasts.
Oh, yeah.
I listened to these people, and I'm like, I'm not like the smartest guy, but I'm not the dumbest guy. And I feel like this isn't like rocket science. To buy a rental that cash flows $200 a month, all like the classic kind of Brandon Turner's kind of like webinars that he would do. And I'm like, I feel like I can do this. So after 2 to 3 years of like, I'm listening to these podcasts, I bought my first rental. Right. And from there, everything went wrong. Right. And then I walk through, okay, well, then like the tenant left, and then it was the middle of winter. So no one wanted to move in the middle of the winter in like I'm central Pennsylvania. And then when I brought someone in, like the heater went out, so you go through like everything that went wrong. And then I had to go back and lick my wounds for 2 years before I bought my next rental.
Yeah.
So I feel like it builds up like, okay, well, you were in the car for a long time, so you listen to podcasts. Like that's an easy thing that most people can resonate with, right?
Yeah. Yeah. Well, and another thing you hit on, and which was in my story too, is the basic elements of the hero's journey, which is just like the go-to storytelling format.
Right.
I wanted to do this thing, a bunch of stuff went wrong, and then I found the secret.
Yeah.
And then I had a transformation.
Correct.
And that if you want that transformation, here is the secret.
Yeah. No, that's great. Yeah, I think storytelling is really what's helped me. Honestly, this year, I didn't realize, and you continue to realize, like, I go through spouts. I'm not sure if you do this as well, but like I go through spouts where I'm like, oh, it's not as important. People are just more interested in the deal. And then I kind of come back and I'm like, no, it's all about the story and what people can, and kind of what people think and how people feel like when you like interact with them during that deal. So
No, it's 100%. Like you have to find a story to prove every point. Like our big product is a debt fund. And so one of the false beliefs, or I'm sorry, false belief is a marketing term. I'm not saying it's necessarily false, but like one of the, you could call it objections that we have to break in our presentation format is, why don't I do my own private lending? And then we tell the story of, my partner's client and good friend who did private lending in our RIA very successfully for 10 years until eventually you will have a foreclosure, and that foreclosure was out of state. And that was a bad time.
Yeah.
And then if you invest through a fund, number one, you get diversification. Number two, you have experts on the ground who know how to do the foreclosure. Number three, you do this. Number four, you do this. And that you match the story to the objection is like a big thing. Like every point, like I cannot emphasize this in my enough, which is why like this is an entire episode about storytelling.
Yeah.
Is like every major point you're trying to make, every objection that you are trying to break, every piece of insight that you are trying to give, you need to do your best to wrap it in a story, and the story should follow the hero's journey of either you or yourself who did it the wrong way, discovered the secret, and here's the truth. Like,
now, what in your debt fund? What other like objections do you get? This is more selfishly speaking for me, because I have a debt fund as well. It sounds like you do more real estate focus. So I'd be curious. I know
you got to tell stories about. Yeah, so we have a really good story about, what happens when an asset goes into default and how do you do workout, And so for us, we tell a story of how our partner. So I'm a fund of funds guy, but like our partner knows, all of the flippers in Wichita where they operate, And so when they do a workout, like they even did a workout on a project that went bad, they got the deal like sold in a week, even though it was not complete, because like a halfway done flip is a problem. That's a hard property to sell. The only person who's interested in that is other flippers, except they know all the flippers. And so the deal worked out actually so well that even the person whose loan went bad made money.
That's amazing.
When it got turned. Then the second guy made money. And then the first flipper took the profits they made and invested it in the fund. That's an amazing story.
Yeah, that is an amazing story. And you just did it to me. I asked and you gave me the story back. That's great.
Yeah. What else we got? Well, I mean, so the other thing we do, okay, I'll give you some stories. So the main transformation that we want the audience to make in my business, I sell to small landlords. And I don't mean small disrespectfully. I just mean like not BlackRock. Individual landlords, mom and pop landlords, whatever term you want to use. Except our expertise is active to passive. So you are active, and then my avatar is in their 50s and 60s, was a successful landlord, portfolio of 2 to 10 million in equity, looking to simplify, number one, because they're getting older and want to enjoy their wealth. And number two, rentals are not great cash flow vehicles, even though they are sold as such.
Preach.
Yeah. Like they are not. So I have like stories for every single piece of that, because we have to like build a case, like from the beginning. Like the person comes in and they're like, I love my rentals, I've been successful, except I'm not happy with my cash flow. Like they don't have to be made aware of the fact that they're not happy with their cash flow. And then so first we have to tell a story, and my partner does it through his first rental, of how like, look, when I look at actually my cash on equity, it's worse than a CD.
Right.
And then they're like, and then what? Well, and then I did this. Like, you can either get a DSCR loan and put it in a debt. Like, and then we get to like, what is your product? Your product should be debt funds, because our avatar has built the equity, and they have the equity. Like, what we sell is that you have the equity to generate the cash flow you need. You've actually done all that hard work. Most people, because it requires a lot of equity to generate a lot of cash flow, like kind of by definition, like there's no free money in the world. Like it requires quite a lot of money to generate free cash flow, no matter how high the yield of your investment is. So what we tell the story is that like you have that equity, you've done the job, and then either through dispositions or refis, you need to go place that money in debt funds. And that because you are going to like quite literally quadruple your cash flow by just like turning one of your 5 properties, like just do one,
So your pitch, and this is a story. So your pitch is to keep to kind of keep the equity, but refinance it and
or sell.
And
whatever they're more comfortable with. It's just like some people are. Look, I'm a believer that you should sell. I'll just say like personally, or the math shows you should sell. But some people are heavily indoctrinated or very attached to their rentals. Except some people aren't, because someone in their 50s and 60s can be extremely freaking tired of managing rentals. They've been doing it for 20 years, and usually the successful people are self-managing. I mean, more often than not, they're self-managing, which I would not wish on my like worst enemy. But yeah, like for some reason they're doing it. And so it's not that tough. I'm really, the other nice thing about a credit product or like a debt fund is that it's always open. And so you just need to give them a taste. You're like, just give me a little bit. And then they get some distributions. And then it like, yeah, and then you invest more.
And that's what I always tell people too, is just test it out. Right. This doesn't have to be your whole, kind of like your whole portfolio. I would never recommend and I think that's another point I had kind of prior to this show is, kind of create scarcity without being sleazy.
Oh yeah. Right? Let's get into that. Let's do it.
So to me, like you don't want to be like the snake oil salesman that's be like, if you don't sign up today, this isn't going to be here for you. Like I hate being sold that way, and I don't want to sell that way. But also
ethical scarcity. That's the term I've used and the term I live by.
Yeah, I like that. But it's also I think it's good for people to understand that there are deals that need to kind of get done now, and also that it feels good. Everyone who has like tested it out always puts more money in, right? So
Yeah.
even if they put in like my minimum to come in the fund, there's always follow up capital because they realize, oh, this is pretty nice. On the first of every month, I get a check in the mail. Like
Well,
that's
and the
great.
amazing part about a debt fund, they're like, if I just give you twice as much money, do I get twice as much back? I'm like, yeah, hypothetically, you know,
Usually how it works.
and they
Yeah.
can do the math on their own,
Right.
like it's pretty easy. Like that's the other thing is that with a debt fund, people work back from an income goal, as opposed to I think with equity deals, they very rightfully say like, what's the minimum I can position size this?
Yeah.
Because like who knows what's going to happen, and it's going to happen in 5 years.
Right.
Like, and then with a debt deal, they're just like, okay, well, my goal is, and our software shows, my goal is every investor's goal is between 10 and 20,000 a month of cash flow. I mean, 97%. There's some people who are like, I need 6 million. And you're like,
Yeah.
okay, bro. Like
The vast majority of us. Yeah.
yeah,
10 to
yeah.
20
It's
grand
like
is kind of what you need to live. Right.
yeah, 10 to 20K, that's financial freedom.
Yeah.
Not that I really don't use that term, I promise, but that is financial freedom. And that, yeah, like that's what the other reason why, if you have a debt fund, you just need an Excel like that you send everybody where you're like, plug in how much you're invested, and here's some sensitivity analysis, and here's what you can expect. And
that's a great idea. I should do that. But it's funny, like, with everyone that I talk to, I do the math for them. Everyone can do the math, obviously, but I do the math for them. Like, hey, if you invest $100,000, this is how much you'll get.
Oh, because you're fixed return.
We're fixed return. Yeah.
Oh, dude, you need an Excel.
Yeah.
I mean, I would, even if you have a website, like any AI tool can build you a slider.
That's true.
That'll just like show
slide over how much. Yeah.
Yeah.
That's a great idea.
Dude, any AI tool will build that for you.
Notes for the fun. Yeah. I have notes from the show here that Craig needs to do this.
Yeah. No, and then you should have like, okay, you need a bank of story free consulting here, which I'm sure you have. Okay, I'll say like, I'm sure you have. You need your bank of stories of how like somebody had a bunch of equity, not enough income, they invested in your fund, and now they were able to retire. Or they were able to retire, or they travel more.
So I approach it from my background. So I used to work for an RIA, right? And I was a portfolio manager there. And like our average client was kind of yours in mind avatar. Yours is more real estate focused, but our avatar there was, someone in their 50s. I'm 50s, 60s with a net worth of, our avatar there was $2 to $10 million net worth. Right?
It's exactly like mine. Yeah.
Yeah. I think it's most RIAs in the country are kind of like that. But to me, I was kind of positioning it to them as like, hey, you can put it in a US Treasury right now, getting you mid fours, and the rates might go down. We don't know, but they might go down. With our fund, you can get more than double that. It's not backed by the US government, but it's backed by hard assets. So it's just another way to say, hey, like I'm 4% with inflation at 3 plus. It's been more than 3, but if it's at 3, you're only making 1% net.
Well, you got to tell that story. Yeah, exactly.
Yeah, the story is like the inflation story, and it's always timely, of course, because people feel it, right? Like they look at the grocery bill, it's like, oh man, that's not fun. So again, going back to the story, I think to me, like I could kind of approach it from like that side of like where I came from, but maybe to your point, maybe I need to approach it from more of like the alternative investor mindset, because most of my clients.
Well, you need several. You need like, I've got this guy, and then what does he want?
Yeah.
And then you're like, oh yeah, I had a client who, dream outcome, like dream outcome, like
right.
dream outcome.
Yeah. No, that's great.
Okay, but back to the scarcity. So how do you do that? Because I think that I don't want to lead the witness, but I think that another reason why debt funds are so great to sell, I'll just say as a category, debt funds, is that they have built-in ethical scarcity and deadlines that are totally not fake. Because if your deadlines are fake, your prospects are not stupid. Like I'll call out my Salesforce rep right now. He's like, I'm about to send you a proposal with pricing that's only good till the end of the month. And I'm just like, like, sure it is. Like,
yeah.
Like, and he looks stupid. Like, even telling me that, he like looks stupid. Like, bro, it's not good till the end of the month. I'll buy what I want. Okay, if it was the end of the financial year, but like, bro, we're in like September.
August. Yeah,
it's not the end of the financial year. Like, okay. But with a debt fund, you're like, hey, your funds need to be in by this date or you're not getting the next distro.
Yeah. And that's how I did I did the exact same thing. Yeah.
Yeah, because it's like the most natural. And then I don't know how often you pay out, but like we're monthly.
Same.
And that's so good because every 30 days I get to run a scarcity closeout. It's crazy. It's
Yeah.
the biggest cheat in the world.
Yeah. It's like if you want the next, 1,000%.
Yeah,
I
and
mean,
you've got like a whole process, and you literally send the same email on the same day of every month, or you send like the same 4 emails. Like if you still want in, and then you're like proof. Like here's what we paid out last month. Here's how much we paid out overall. Here's this. Okay, next email, and then
right.
all these people who were in your pipeline come out of the woodwork, and then also a bunch of people who you didn't even talk to yet are just like, oh, can I still get in? And you're like, well, maybe if you hurry. Like, and it's totally not BS. Like that's the other thing is it's just completely true that you're like, if your money is not in on this date, you will not get this distribution. I don't know what to tell you.
We do the exact same thing. It's easy to do the scarcity on a real estate deal or on a private equity deal. It's like something that actually has like a hard close. Like once the funds are in, like we have to put it to work on this date or an equity deal, right? But with the debt, it's because I do the same thing that you're like talking about. I get a little bit of like, oh, well, we'll just do it next month. That's fine. I'm like, okay, well then you're not going to get the distribution.
I mean, yeah, you can't catch them all, but it catches a lot of people, or they'll come in next month and you get to run the same playbook on them. Like,
yeah,
like I'd say the problem with an equity deal, and I'm steadily becoming more vocal about this, or like being like just out with it, and I'm non-apologetic. I'll put it that way. Is that credit products are just so much easier to sell. Like just by every stretch of the imagination. And actually, this is a show like hypothetically. Okay, I am a fund of funds manager, which means I'm asset agnostic and everything like that, which is really great because it means I get to choose my strategy. And I apologize to everyone listening who's not in that position. But like I see, like, do you know the Greek myth Sisyphus? Like this has really crystallized for me. See, I'm telling a story. Watch. The Greek myth Sisyphus of the guy who pushed the boulder up a hill.
Yeah.
Yeah. That is equity raises. Is that every single one is pulling teeth and it's a brand new rock and it's a brand new hill. And that when you get to the end of it and it's over, you are on to the next one. And it is absolutely brutal and everything closes at the end. Because you finally like half the capital you're going to raise comes in at the last minute. And that you spend 90 days like chewing glass and then everything comes in like the last 2 weeks. And then you did all of that to start over tomorrow.
Yeah. Well, it's funny you mentioned that because I have the debt fund is our kind of core offering, right? And as another offering for clients, I run my kind of debt fund as partially fund of funds, partially like I'm direct deals.
So that's cool. I'm thinking of getting into that.
But I heard a lot last year from my clients that like, hey, the debt fund's cool, but we want something like we like you. We want something that's more equity focused, like some more juice for lack of a better
little more risk.
A little more risk, kind of like risk on. Like, okay, so I heard that. And I have a couple offerings currently that are not the debt fund. And you're 1,000% right. We're in the final month-ish of both of those offerings. And this will probably be aired after that. It's the final, like, I'm having so many conversations right now. Even though I've been like trying to raise these for a few months, if not more. And it's all going to come in at the very last second. Like more than half of the raise is going to come in. Of course it is.
Like that's how okay, now compare this to a debt fund where you get to run, well, and it's the other part is you have to run a novel playbook or what is materially a novel playbook and a novel story, completely new investor conversations, explaining a completely new deal. Like that's a lot of work even coming up with all these materials, let alone if you have to train a sales team, then compare that to a debt fund, which is always open and you get to run the closing playbook every 30 days. And it's the same playbook you run every 30 days, completely mechanical. I sent the exact same email, and that I was caught up in my own, making it hard and complicated, and that actually things came to a head because I have a lot going on, as everybody does in life, and I didn't have an email written on a deadline for a closeout, and these closeout emails are the most important emails we send. And my partner's my wife, and my wife is like, you are sending an email on this call. And I was like, okay, I guess I can just take the email I sent last week and change August to September, and just change August to September in 5 places. And change out the link to the monthly fund update. I sent it and it did even better than last month. And I was like, I was like, wow, it's that easy. Like so much in marketing is just like have a playbook. If you have emails that work, keep sending almost the identical email, put it on a schedule. You can send the exact same. Trust me, no one on your email list is paying attention closely enough. They're not, because they don't care about you at all. You are a tiny, tiny part of their life that they almost never think about.
Yeah.
They will not notice that you send the exact same 4 emails every single month. And if that email crushes, send it again. Like,
right.
I talked to the kid who runs another one. This is a good story. So I talked to the kid who he does marketing for Viking Capital. I don't know in what role, but marketing, Viking is like a machine, dude.
Yeah.
Like they are great marketers.
Yeah. I see
top of the game.
Yeah.
He's like, he told me for their webinar emails, we were doing the same thing. We were writing 3 different emails to promote a webinar. We usually send 3 emails within 10 days.
Sure.
No more than 10 days because registrations drop off, or show rate drops dramatically past 10 days. Like, I mean, it's people can't see me on this podcast, but someone who registers the day before is going to show up 80%.
Right.
Someone who registers day of is like 95%. Someone who registers 10 days before is like 14%.
Yeah.
So it's like, no, you just need to send like more emails right up to it, which is a good thing because you're not like, oh, I'm clogging up my list and I've got this huge promo plan. You're like, no, just send 3 emails the week of. Like, it's easy. And then what the Viking kid tells me is he's like, we send the exact same email all 3 times. and I was just like, that makes a lot of sense because nobody's paying attention.
Yeah.
Like,
well, they just delete it, right? They don't even open the email, right?
Well, more than likely, they just write past it.
Yeah.
Like, and so, like, you don't have to spend the time writing 3 emails. Like, just write a banger, write one, send it 3 times, filter out the people that already registered.
And I think that's, I mean, I get my own head on this stuff too, is I'm not a marketer by trade, but it's simple principles like that that you can raise capital, even if you're doing one deal at a time, right? This doesn't have to be for a fund. If you're raising capital for a 8-unit building, right? Like it's I feel like it's kind of like the same thing. Just do like the simple stuff multiple times, and that usually works, right? Because you're right.
Just do it more.
Yeah, because I always get caught in the same thing. It's like, oh well, I sent that email and I had the exact same information on it, and then I'm like, Craig, stop! Like people aren't like
they don't care.
Yeah,
they don't care about you. Like, send it again. They didn't read it.
Yeah, you look at the open rates. Even the open rates, it's like, did people actually even read? If they opened it, did they read it? Maybe not. Probably not.
No, and half of those are Apple privacy opens because if it gets sent to an iPhone, it gets opened automatically. So you don't even like.
I didn't think about that. Yeah, that makes me even sadder.
Like, yeah, I worked with a guy who, Nabil Aziz, gonna give him a big shout out. He brands himself as Dubai's most expensive copywriter. I love it. That's great branding. He says, like, he very much got me into, and I've said this on the show before, like, unsubscribe, buy or die. Because like, if someone unsubscribes from you, like, they were never going to buy from you. I promise you. Like, it's okay. That's not the point I'm trying to make. The point I'm trying to make is when someone subscribes, that is like the one moment where they care and are paying attention. And that he recently said, like a tweet storm that I think I'm going to try, which is that when people sign up for my email list, he said in the first 10 days, you should be emailing multiple times a day.
Oh my gosh.
No, it's true though, because that's when they care. Like they're going to be the most engaged with you and your brand and most in the mode of wanting to learn more and actually reading your emails in like the first 7 days when they subscribe. And after that, they're going to fall off a cliff. And so you need to
unsubscribe, buy or die. Was that?
Yeah.
Okay.
But like,
that's great.
Well, because it's kind of the attitude that you got to have. You're like, oh, I'm soaking the list. And you're like, too bad. Like, dude, because someone who, like, because I get caught up, like, every time we got an unsubscribe rate that's very industry average, like 0.3%, 0.4%. And then obviously get a little upset, and I click the email report and I see the names. And then I'm just like, none of these people are going to buy from me.
Yeah.
Like, there was not a chance in hell that because I don't send, like, for the record, I don't send an email every day. We send 2 or 3 emails a week.
Okay.
Like, most of them are value. Yeah. Like they give good value. We're not over the top. We're not obnoxious. Like, and also our financial products are really good, so I don't know what to tell you. Like we
Right.
crush. Um, Look, none of these people are gonna buy. Like they were never gonna buy. So
Right.
why do I care if they're on my list? Like at all?
It's just for a vanity metric at that point, right? To say that your list is X amount of, for you to look at it and see that many people, but that doesn't matter.
Yeah, no.
Right.
And they click unsubscribe, and I'm like, fine. Like. No, I have that little battle in my head every time I see the like 8 people that unsubscribe, and I'm just like, yeah, I don't know any of these people. I've never spoken to any of them, and none of them were gonna buy. So like, it really doesn't matter if they're gonna read my emails or not.
Yeah.
Yeah. So,
That's all
anyways, I'm gonna try that. I will report back on the show. I'm gonna start. Yeah, I think I'm gonna send 2 emails a day for the first 10 days and see what happens.
Okay.
From what Nabil said, we can expect like a double lift.
I would love to hear the results on that, or maybe I'll just try it too. We can run it in parallel.
Yeah. I mean, because it's totally true that like right when you, all the theory makes sense. That's why I'm comfortable doing it. That right when you subscribe, that's when like every time you opt into a new guru, you read all the emails for about a week.
Yeah. Or if you see a new deal and you subscribe to their list and you want to hear everything that there is to know about them, you don't want to hear about it next month or next week. You want to hear it now, right?
Yeah.
I mean, that's just me personally.
No, it's everybody.
Everybody. Yeah.
Yeah. Like, yeah. So I'm going to try that. What do you got in terms of new tactics in the belt you're looking to try?
I've tried a bunch of different stuff. I can go down the list of things that
what's working?
Yeah. What's working? That's what we're still trying to. So my biggest challenge right now, and I wrote this on our little list of things to talk about, is trying to build a machine. I'm still kind of testing. I have a business coach, and his big thing to me is marketing is just testing, and you should test as many things as you possibly can, because you'll never know if it doesn't work or not.
I also think it's a series of hundreds of 1% improvements.
Yeah, that's fair.
Yeah, across every step. From top of the funnel to the bottom of the funnel to everything else. And a lot of it comes down to just applying best practices of just what's working. And okay, here's what I would tell you. I think that the thing that you should practice is your monthly closeout.
Yeah.
Like that is for sure your juiciest, whatever source of juice we want to choose. Like that's where you have the most juice.
Yeah.
Especially because a major problem in our business, zooming out, I mean the asset management business, is very slow cash flow conversion, which means that like I'm of the opinion that scaling top of funnel is also the most expensive and riskiest thing you can do. And that we are not like an e-commerce or a chorus business where we have good cash flow conversion. And so that by having an imperfect lead nurture and closing process, like we can still make money. No. In our business, you have to have your lead nurture and closing process at absolute platinum tier before you can even think about trying to scale outreach.
Yeah.
And so I would say for you, it's just absolutely dial in the playbook on your monthly closeout. And just like, what is your messaging? Like, how many emails are you sending and when? How are you like calling people and messaging around it and having a lot of discipline to, I don't know if you're doing this already, but are you calling every single person who clicks a link in your email within a day?
Definitely not.
Start right there.
Yeah.
And especially if you can call within an hour.
I mean, to me, speed of the lead is, and I'll talk about kind of some of the other things that we're trying after you go on this, but yeah, I mean,
that's pretty. I've made my point.
I'll go through the list of things that I've tried, and I think this is helpful and it goes along with another point that I'd like to make in terms of like outsourcing, right? Okay. So, I've tried LinkedIn outreach, right? So using a third party to do LinkedIn outreach, had mixed success with that. I say mixed success. I haven't gotten any clients off of it, but I found an incredible deal off of it. So I think that is mixed success.
How long have you been doing it?
5 months.
Yeah. See, that's the other problem with our industry is that sales cycles are so long.
Right. You don't know if it's working.
That like even doing top of funnel, you have to be so dialed in, man. Like,
yeah. I have hired a cold calling service.
Okay.
That actually worked fairly well. I'm sorry.
Who you calling?
So how it works, and I won't shout out their name. I don't feel that like I'm passionate about them. Is they is they have a full time cold caller. It's not cheap. They have a full time cold caller that's U.S. based. I think it's important that it's U.S. based, by the way. That's calling out 40 hours a week, and that
Your own list, but so it's not your own list. It's cold. But who are they
cold,
calling?
just accredited leads.
Okay.
And they put them, so every day then I get a list of people that say yes, it's my job, and they put a little note like saying, Joe is interested in in this offering. Call him next Tuesday between this and this time. So then I entered, that's to me that's an opt-in that they're interested
It's
in.
the handoff.
Yeah.
Yeah.
So it's even with that, it's still fairly low conversion rate. I've tried that on a couple of like the private deals that I'm doing that are a quicker close. I've had mixed results. Like the first month it crushed, like it raised more. It definitely paid for itself. The second month
Oh, really?
did not. So, yeah,
Huh.
I thought that one was interesting.
How many names do you add to your list a month?
To my email list?
Yeah.
Like from that cold calling service you're asking, or just
Everything across. I would actually say no, excluding paid.
Excluding paid? Oh, very minimal. I'd say less than 50.
Okay, that's not that bad though.
Okay.
Well, I mean, are we talking like way less than 50 or like 5?
No, like 20
Okay.
or 30, I'd say. If I
Okay,
if I were the number, yeah.
That's respectable. I would say I would give you my information. My new leads are not much higher than that.
Okay.
I'm not in another ballpark. Think that you need especially if like you're like, I'm not calling people the same day they click a link in my email. That is your by far lowest hanging fruit.
Yeah.
Like, especially because when we send emails, like so my dialer who started working for me, he's in house. Great dude. Mount Malloy, love you, dog. No, he's the best. He came from a cold calling background. We're not, and he's used to cold calling. And so this is the first time in his career where he's not cold calling, like he's warm calling by definition.
Yeah.
So he spends about half his time just working the old database, of everybody we have, like previous close ones, close loss, and then worst case getting colder and colder. And of course, performance deteriorates the colder you get. But his message in Slack, when I trained him how to, like, one of the problems we have, it's not a huge problem, but my mailing system is different than my CRM. And that's because I use Salesforce. Like I'm used to be a CRM professional. So very complicated setup. But I trained him, like I gave him a login to the mailing system, which normally a dialer would never had, simply
Right.
because I just need to train you how to look up who clicked here without me having to engage someone else to send you a report, And then his message in Slack, the day after I told him to do that, and this was on a closeout email, was like, I have never done a book of calls in my life that was so productive.
Wow.
And now he's like, yesterday, he's like, are we sending more emails this week? And it's because, and then it was the same list. I'll give you another story. We're continuing the stories. Is he wasn't able to call everyone the first day because we got about 60 clicks.
Okay.
And then the next day, he was like, not nearly as effective. 20% the results is same day clicks.
I believe that.
Yeah. And so I would say I would really dial in speed to lead for you. Because if you're getting 50 opt-ins a day or a day, I know you said a month, 50 a month, like you've got not trying to neg you, but like if you're not calling people same day that they click links and you're not all over that like a hawk, you're leaving 80% of the money on the table, or at least opt-gens, converting to ops
No,
at
you're
the
right.
very least.
Yeah.
Like, and that dial that in and then you'll be able to scale top of funnel. Like it's just in our business, scaling top of funnel is so hard. Like it is so hard because we have such poor cash flow conversion. Like we've got really great margins. They just take forever to pay out.
Yeah.
Like that is a problem with this business. The other way you fix that is choruses, FYI, but that is like which I have only come to recently, is the reason that everybody's a chorus boy or all the big names in our industry are chorus boys is that it's the only way to dramatically scale a top of funnel, is because if you can get somebody to like a decent amount of people to pay you between $1,000 and $25,000 like up front, like that massively defrays your ad spend.
Of course. Yeah.
Like, so there's that. If you really want to go crazy, which I think is actually a requirement to really going crazy. And by really going crazy, I mean like spending $500K a month, plus. Like, word on the street is Grant Cardone spends $60 million a month, which
Really?
I'm not sure about that claim. That would put him in like within the realm of like a Nike,
I was going to say that is obscene.
Yeah. But that's what winning on ads looks like. Like good ad campaigns. Well, good marketing, you should hypothetically not have an ad budget because you should have good cash flow conversion where you're just like, yeah, I put $1 in and then within 45 days I receive $5.
Sure.
And
I would take
therefore I like
$1.50 back, I mean,
yeah, like just keep shoving money into the machine,
Right.
like as fast as you can. Like that's what good, like if if you're not doing that, then I'm of the opinion that you should not be shoving money into the machine.
Right.
Like until you can do that. And so, yeah, that's my feedback to you. And this is just my own learnings of like having burned a whole lot of money on ads and not doing that now.
Yeah.
And just like we absolutely stopped. Like we absolutely stopped spending money on top of funnel. And now I'm in a position where I will be restarting it by the end of the quarter. But it was spending 6 months just absolutely dialing in like what are we doing with the leads we have now? And that came down to like for mine, and you're lucky that you have almost the exact same business that I do, really dialing in the monthly closing cycle, which is, by the way, fund update in the middle where we report fund performance. That's on or around the 15th, and then a scarcity closeout for the remaining 15 days of the month. And then that actually works out because you can regroup with the team in the first half of the month because it's very exhausting. Those last 15 days are like really intense, for everybody. You can't focus on anything else other than this closeout. But then that gives you the first 15 to like make improvements. So that means that on a 30-day cycle, you're running a test.
Right.
Like it's a beautiful cadence from an operational point of view. Yeah, that's my advice to you is like dial in your closeout, really get hard numbers about my organic leads that come in and am I doing every possible thing to convert them? I bet you there's a 2 or a 3 or a 5x in there, like in your current business. Pull that off and then revisit top of funnel.
Okay. Because I spend most of my marketing budget now on top of funnel stuff. Right. So I had the cold calling. I did some ads on Facebook, LinkedIn. I did some ads on Facebook, Instagram, that stuff. Didn't work that well, to be brutally honest with you.
No, dude, same here. It was a disaster. I lit money on fire. Like,
right. The lead quality was horrendous.
Yeah.
So, okay. But it's just, because I always think back to my old days and I worked with a advisor who raised a crazy amount of money and it was all through referrals. And I talked to him as I left and it was on good terms. And he was like, for the first, and this hurt me to hear. And I was like, I'll be different. This hurt me to hear. But he's like, the first 10 years of my career, he's like, I just like ate, for like
no,
10
eating
years.
Glass. That's what we say. Eating glass.
Yeah.
That's
this took, like, he's like, I would take any little check size I could. He's like, I mean, because we have minimums, but he's like, I would take like a guy. He's like, I remember one time I took a guy that had like $1,500 as an investor, right? And he's like,
that's an RIA. Okay, that's all right.
Right, yeah, he's like, I would take anyone I possibly could, and now he has a referral network, and they raise, 9 figures a year.
So I mean, what he did in the middle is created a brand. Like that's the other thing is the other way to win. Like you cannot win in ads. I'm gonna say cannot, but the one thing that will cut your acquisition cost in ads by 90% is a brand.
Yeah.
And so that also makes an argument of you should not be spending on ads until you have a brand, except that's also where choruses come in, by the way. Is it gets a little bit of the self-licking ice cream cone on being a guru, having a brand, and being able to pay for ads.
Right.
But here's another tip. Doesn't have to be your brand. Pretty easy to rent a brand.
Let's talk more about that. What do you mean by that?
Partner with an influencer.
Okay.
That's what I did. Like, really? No, I saw a tweet from SaaSwiz Shout out Sasswiz on Twitter. Like, he's like, always start a business with an influencer. And I was like, that was between my last business, which was fairly successful. Well, it was real successful. And this business.
Yeah.
Except what the failure in that business was actually a sales and marketing failure. Like massively. And that this business is I was a marketer by trade, and then in the middle I was an IT professional. And now I am a marketer again. And that is because of like, well, what happened is that I had a whale client who was paying me $5 million a year, which is great until that whale goes away.
Yeah.
You know, and the problem we had was that like, well, we were a dev shop, and so we literally couldn't even get new clients because they were like doubling our budget every quarter. You know, and so there, yeah, no, which is good and bad. No, it was really good in the moment, but that we just could not go out and sell, did not even think about going out and selling because we're just like, oh, we're just doing delivery on this client.
Sure.
Like, and margins were great and everything was cool until it wasn't. And then it was over, you know? And then by the time we had like turned our attention to sales and marketing, it was really too late. And that also that function in the business was just like massively underdeveloped.
So what influencer do you partner with then?
Well, it's Chris Lopez. He was local. So he was the host of the Denver Investment Real Estate podcast.
Got it.
And which is where I was moving. And then I was like, and he actually is the guy who came up with the idea for the software too. And he's like, can anybody develop this? And that I was between businesses and I was like, well, I can develop it. Yeah, sure. And like, and that he was my broker. And the reason I had the confidence to work with him is that I was a very challenging client because I was overseas. And that, well, as a business owner, I understand service, you know, and also that delivering good service is like very hard and most businesses don't do that.
Sure.
Yeah. I just said, okay, I'll develop the software with you, you know, except the thing is you can rent an influencer. Like they're also really cheap.
Really?
Yeah, your average.
Now I feel it.
Yeah. Like they're really cheap. I mean, every single person who's got an audience of, you know, 10 or 15,000 people, like most of their ads are dramatically underpriced, especially because there's like so many of them that you can just you know what I mean? Like go hire a VA to go, like don't go through an agency because they're marking up 3X.
Of course. Yeah.
You know, or go through said agency and then they'll give you the list of creators and then just circumvent them. Like, you know, it's the same thing buying SEO links. You're like, hey, if you just like all SEO links are marked up 4X. Like, that's just how it is, you know. And if you message almost any of them and you're like, what's your rate for a whatever, you know, I would say you want one with a list, you want to do a webinar, like you want to be looking at like a real promotion, like not some churn and burn thing.
Sure.
But that's what I would look at. Well, I mean, I would argue that's a far better use of spending money than Facebook ads.
I love that. Yeah.
Yeah, like that's probably where we're going to be scaling top of funnel. It's going to be more of a like
what's in the niches, right? Like, I mean, when you put ads on Facebook and Instagram and stuff, I mean, that's to the masses.
Well, and also there's no brand. They've got no affinity. Right. At the very least, when you rent an influencer or rent a list, like you're borrowing the affinity of whoever's list that is.
That's true.
Yeah, you know.
That's amazing.
Yeah.
I feel like I got a lot out of this podcast, probably more than I gave the listeners, which I feel bad about. But I
think my chorus. No, I'm just kidding.
No, that's amazing. I love the influencer idea. The follow up is awesome. Yeah, honestly, and another idea, I guess, for raising capital. This is kind of like old school stuff, but this is kind of one for one right now.
2 minutes. So to wrap up,
I got it.
To wrap up, what is it?
I hosted a steak dinner at a nice restaurant with like people that,
great.
And I called it like an interesting people dinner. Right?
No, that's great.
I didn't pitch it all.
It's
and
perfect.
A client that came from it. So.
No, exactly. Because what matters is like those were high quality leads who had affinity with the person that they invited or invited them. You got to build a relationship with them. They were very high quality leads. Like I would rather take a much more expensive, much smaller amount of leads over the inverse.
Yeah.
You know,
quality
and
over quantity. Yeah.
Yeah. Like, that is great top of funnel. Like I would say, especially because like we live in the world of, you know, if we make 20 sales in a month, we raised a ton of money.
Without a doubt.
Yeah.
I mean, an incredible month. Yeah.
Yeah. Like, so dinners are great, you know? like not Facebook, like not random people on the internet opting into you who never heard of you, and like who knows who the no, dude, other way, like on the spectrum. Go to the
Right.
crash to the other end of the spectrum. So, all right, Craig, I'm glad that you enjoyed this. Send me an email and I will send you my SOPs. And also that goes
I
out to
will.
anybody on here. If you DM me on LinkedIn or X, Twitter, which I prefer, I will send you my SOPs. I'll send them to anybody. Like, see
I
you
love
around,
it.
man.
Yeah. Thanks, Richard. I
Oh, how
appreciate
can
the
people
time.
find you? How can
Oh,
people
yeah,
find
yeah,
you?
yeah. You can find me eplercapital.com. You can email me, Craig@eplercapital.com. We're on LinkedIn, all the socials. We're posting there 3 to 4 times a week. So
Awesome.
hit me up.
All right, guys.
Thanks,
See you
guys. I
later.
appreciate it.